Hey guys, Stock Saturday, and it's a down week in the markets, but I have outperformed ever so slightly this week. Looking at the S&P, it's down 1.7%. So we had a few knocks this week. Tariff news coming back. Europe tariffs is looking like from the US on EU products, and yeah, various sort of attacks on Apple from the looks of it. He wants them to be making phones in the US, which I can't see ever happening. They sort of moved from, he was pressured, Apple to move from China before, and they sort of moved to India, and now he's sort of saying get out of India. So, yeah, interesting, and not really sure how you run a business on that, that sort of lifestyle. But there you go. Nasdaq has done a little bit better, down 1.05%, but I am up just under 2%, so pretty happy with that, to be honest. This is off the back of a little bit of gold and crypto, slight bullishness. Bitcoin made new all-time highs, so some of them have done quite well, some of them not so, strangely, but yeah, hopefully they start to improve. And yeah, not a huge amount of change in this portfolio. No additions because sort of mentioned last week, I'm holding this cash now, and sort of all of the other cash that I can get my hands on in the other accounts and elsewhere to hopefully pay off my mortgage. So maybe looking to, well, will be looking to sell something else in the portfolio in the next few months as well. Hopefully, the sort of crypto stuff in the options side, but anything can happen, I suppose. So yeah, let's have a look at some news. So, I mentioned last week, Pan American Silver had dropped a reasonable amount on news that they were making an acquisition, and yeah, thought I would take a look at their results and the acquisition as well. They've done another little PowerPoint presentation similar to Equinox acquiring Calibre Mining. So we'll take a look at that. But yeah, looking at their Q1 results, revenue sort of 773 million, not too bad. Net profit as well, 169 million. Although they are sort of, $9 billion company. Kind of be hoping for a little bit more than that. Guessing Q2 will look a reasonable amount better because gold price has increased significantly since Q1. So yeah, that's good. Production is still noting 5 million ounces of silver, which they were kind of hoping for sort of more towards 6, 7, and 7.5 even not so long ago. So it's not great, but yeah, live with that, I suppose. And 180,000 of gold. Again, kind of hoping that was going to be 200, 250. But there you go. And this is why they've made the acquisition as well, to get more silver. Obviously, Pan American Silver is in the name, and they're still quite heavy on gold as far as revenue goes. And the last acquisition from Yamana, I think, was it, sort of pushed them more into gold. So yeah, they wanted to address that, I suppose. All-in sustaining costs, though, are quite good. $13.94 on the silver side. That looks like it's coming quite a bit from Cerro Moro, which it looks like is due to byproducts and sort of 1 or 2 quarters of particularly good grades. So yeah, that's not sort of expected going forward, although it is still, expected to be a very low cost mine. But they have, others at sort of 1972, which yeah, with silver at $33 isn't so bad, and another at 1970, and then yeah, on the gold side, 1485 is pretty good. Most of the mines sort of at 1200, 1300, 1400. A couple, I mean, this one is sort of not a huge amount of gold. Their main one is the Jacobina mine at sort of $1,243, and they do have a small one, Dolores, which is at $569 all-in sustaining cost for gold, so at $3,300 an ounce. That is very, very strong, and that will be contributing to part of that net income, I'm guessing. And obviously, similarly with this silver mine at negative all-in sustaining cost. Balance sheet is looking strong as well. Cash and short-term investments 923 million, and total debt of 804 million. So net cash, you don't see that all too often with gold and silver miners. And noting that some of this debt is sort of coming up to maturity, but end of 2027. That's not the worst thing in the world. And then the bulk of it August 2031. So not too bad at all. And then yeah, I don't count the revolving credit facility as sort of strong financial position. Would kind of hope they don't need to be using that, but they always like to sort of talk about it. And guidance for the whole of 2025 still looking pretty good. Silver production 14 to 15 million out of the main silver mines, 20 to 21 million overall, and sort of 760,000 ounces of gold. It's not great. I'd hoped for more, but you have to live with that. And all-in sustaining costs, yeah, they've noted the one that had the negative all-in sustaining costs. They're saying $6 to $10 for the year, so that is extremely strong for silver, as I say, being at 33. And for the gold side, say 1,575 is a little bit more than some of my other miners, or certainly what they're looking for. But yeah, not awful, and it sort of gives you more operating leverage really. If prices go up, then Pan American should see more of an outperformance with having higher production cost, just less safety, if you like. Just noting their shareholder returns as well. I don't really mind this policy at all. Sort of base dividend, which they don't really raise all that much, of 10 cents per share, and then a variable dividend. So if prices sort of continue to do well, then they pay this variable dividend, and it'll be reported as dividend gains. But then presumably at some point we go into a gold and silver bear market, and they'll go straight back to the 10 cents, and it'll be reported as a dividend cut, and the price will probably go down. But yeah, it's reasonable way of doing it. Means that they always keep that 10 cents. They're not completely cutting it in theory, unless things get really, really bad. And then doing some buybacks as well. Although I kind of think if you're issuing new shares, merging with new companies and that sort of thing, while also doing buybacks, it's a little bit messy possibly. So the acquisition, they are looking to acquire Mag Silver. I think this is expected that it would go through. They're not exactly a huge company, and there's no issues with antitrust or anything like that, so you'd expect this to go through, assuming they accept it. And it does look relatively favourable to them. This is basically a sort of one asset company. They have part of a stake in one of the Fresnillo mines. So Fresnillo, sort of a fairly big holding of mine, doing quite well, and it is a very low cost mine. So they're paying a decent premium for it, with silver sort of pushing up to $32, $33. Obviously still lagging gold, but people are particularly bullish on silver, so paying between 21 and 27%, depending on the option that people take. So 21% premium, even on the low side, on top of the Mag Silver price. So Pan American stock sort of ratcheted down relatively in short order as a result of this, because no one likes paying 21% more than a company's price. The sort of their company price, you would think, is seen as currently fair value by the market. So if you issue a load of stock to buy at even more than that, then your stock drops. So they note the benefits for Pan American. This increases Pan American's silver contribution, making them, as I say, a little bit more true to the name, and it is a very good asset. They're looking to produce sort of 14.7 to 16.7 million ounces for the total mine. So Pan American would gain, about 7 million of those ounces. And it's an incredibly low-cost mine from the looks of it. All-in sustaining cost expected around $7 for the whole of 2025. On a cash cost, it is essentially flat. At times negative cash cost. Again, I believe due to sort of high grades in the short term and sort of byproducts that they sell on. So, yeah, very profitable, and that's why you have to pay sort of quite a bit of premium for it. And they do give benefits to MAG shareholders, so I guess they're giving this presentation to them. Top one being an immediate attractive premium, so you can get cash for your shares or Pan American shares. Whether MAG shareholders think they will do well, don't know. They note of all the sort of large, primarily silver-focused mines, it is one of the best, all-in sustaining cost per amount of ounces in the world, essentially. For, large mines, you'd often have a higher all-in sustaining cost. Some of these sort of at $20, $25. The Fresnillo mine, actually, that they have is sort of not doing particularly well at the moment, sort of around about $27 all-in sustaining cost. But the Mag Silver one that they have, as they're saying, is very low cost. They've got it sort of between $10 and $15, but they are saying around $7 for this year. So to have one of the largest silver mines in the world at the lowest cost is very, very strong. And again, they're saying this will make them one of the largest, the second largest silver producer in the world, behind Fresnillo. As far as primarily silver miners go, I suppose, should remember that my other copper stock, KGHM, do about 43 million ounces of silver. So yeah, they're not sort of put in slides like this because they're sort of primarily a copper miner, but it should be worth noting that they would slot in here at quite a comfortable second. They're 16 million ounces past even the new pro forma Pan American silver. So yeah, I kind of think they get ignored in slides like this and kind of forgotten about. Yeah, obviously being lower cost, they're saying this will reduce the total company's all-in sustaining cost on the silver side to about $14, just slightly over $14. So that's pretty strong. If we get another dollar on the silver price, that's $20. EBITDA profit, if you like, per ounce. So very, very strong. So we got Iron's results on the crypto side. They report this as Q3 financial year 25, but you can see this as January to March, obviously. Profitable, has to be said. You don't get too many profitable crypto miners at the best of times, even on a net profit basis, and they have been profitable for Q1. I believe pretty much the only miner in the industry on a sort of proper net profit basis, not including one-offs and derivatives and that sort of thing. And this is largely due to this all-in cash cost, $41,000 per Bitcoin, all-in cash cost. So electricity, the miners, and everything, versus 93k per Bitcoin mined. Obviously now we're at sort of 107, 108, even after a slight drop yesterday. And they have the most efficient fleet of all the public miners at 15 joules per terahash. So very, very strong. They're still saying on track for 50 exahash by June the 30th, so that's just over a month away. They're at 40 now, so don't really doubt that they'll get to that. And they're saying it's an expected 588 million adjusted EBITDA per year. So that should be pretty strong. Obviously, it is adjusted. EBITDA is an adjusted number, and then adjusted an adjusted number. So it's always that way with the crypto miners, but at least net profit even should be good as well. And the AI cloud services, obviously, this is a large sort of extra option that they can do well with. They're obviously small scale at the moment, run rate of $28 million annually. They haven't made $28 million sort of in the last 12 months or anything. This is taking the most recent month and then timesing that by 12 every month as they're growing. Growth companies like to use this sort of run rate metric. So that's assuming that all of this revenue carries on. Obviously, that's not assuming that it grows, I suppose. Next month could be more than this month, and that would increase this figure. So it's maybe not, overly optimistic. And they're saying they can grow this quite a way. They have a 50 megawatt data center, liquid cooled, Horizon 1, targeting delivery for the end of the year. But then, considerably larger sites that they're looking to build as well. They have 750 megawatt liquid cooled data center potential at the one site in Childress, where the 50 megawatts is, and then 2 gigawatts of power potentially at Sweetwater. But this would need an outside partner similar to Core Scientific and CoreWeave to sort of come in and front a lot of that capital and probably own part of that site, or however they want to do it. So they're saying 1,400 megawatts to be energized in just under a year, and then the remaining 600 in sort of late 2027. But this really does depend on people like CoreWeave and the other sort of AI big scale tech companies wanting to come in and take it, basically, because they don't really have the money to build anything like this out. This would take billions and billions of investment. So we'll have to see. They need an AI deal. But you have noticed, if you've noticed, CoreWeave since the IPO are up sort of 180%. So they are looking quite good. Whether I think they're looking to raise more money, whether they would be potentially doing a deal with one of the other miners. They've only got Core Scientific at the moment, but yeah, looks like they're bringing on OpenAI and Google as new partners. So kind of hoping that they may be looking to expand outside of Core Scientific and maybe do a deal with either Riot or herein. So the results, they compare their results to last quarter rather than this quarter last year, which I don't really mind. Last quarter was sort of somewhat better in terms of price, but they're obviously expanded quite a bit since then. So revenue is up 141 million, and AI revenue at 3.6 million. So, as you say, you sort of times that by 4 as a sort of quarterly annualized rate, and it's a lot less than they're showing. So it is expanding quite rapidly. Electricity costs and other costs. So other costs is employee benefits, expenses, professional fees, site expenses, renewable certificates and everything. So yeah, a lot of stuff goes into there, and that gives you adjusted EBITDA of 83 million. That's what they choose to include above the line, if you like. And then you have, other costs, some small stuff really here, share-based compensation, and then sort of below the line, finance expense and depreciation obviously is the big one. Buying all these sites, building sites, and yeah, it has a lot of depreciation associated, and then tax of 5 million, but 24 million in net profit, which I don't believe any of the other miners have done. Even if because most of them obviously have quite a large hodl balance, a treasure trove of Bitcoin, and when that goes down as it did in Q1, they report a net loss on that. But I think for the most part, even if you add it back in, and do it sort of excluding the hodl change, a lot of them were still at a net loss in Q1. So that's not ideal. Whereas Iron obviously don't hold any Bitcoin. They sell it every day, what they produce. So there's no adjustment to that. And they are very, very efficient, low power cost and efficient fleet. So yeah, 24 million is about 15% net margin, which is pretty good. And if we can have hash rate not sort of rapidly increasing as it has been, difficulty not rising too much, and Bitcoin price sort of rocket up hopefully over the next couple of quarters, we could see this margin come right up. If that can get to sort of 30% again, as it has been in the past, then people start looking at someone like Iron as sort of no complicated additions for revaluing the Bitcoin. It's just a 30% high margin company, and hopefully people sort of start to project that out long term, even though it wouldn't be long term because it's Bitcoin. But yeah, you could certainly get a re-rating, sort of PE expansion, and that would be sort of the time to get out, I think. Because I have mentioned multiple times that I'm not looking to hold these too long. Hopefully not much more than the next year or so, or within this year, because it's still a fairly poor model, even for someone like Iron. They're doing well because they've got their fleet efficiency to 15 joules per terahash, but there are rigs coming out in the next year, I believe, that are sort of 10, and some in testing at the moment that are potentially 5 joules per terahash. So Iron have done quite well because they waited and waited and then have expanded a great deal and have been able to sort of put nearly all of their miners in at this sort of 15 joule per terahash rigs. But if you get somebody decide to wait and then do a massive expansion next year and they're 5, they're going to be pushing hash rate and revenue dramatically up, and Iron suddenly have a very low efficiency fleet. So it's just completely different to sort of gold mining and other types of mining. Other companies expanding can push your cost up, which just doesn't happen elsewhere. So overall, I think it's obviously required for the Bitcoin network, but I don't think it's quite required at the scale that that we have. I think you could have a lot less hash rate and difficulty would just come down and it would work exactly the same. So people sort of saying that we need all of this expansion for the network to do well, I haven't seen really evidence of that. But so yeah, it's something we need, but it's not something I think makes public companies attractive. So, looking at some news for the week, we had some inflation news from the EU, all as expected. Core inflation up from 2.4% to 2.7%. Whether that means rate cuts potentially slowing down, I'm guessing so, because they were getting towards their 2% target. We had UK inflation numbers, all sort of higher than expected, so that wasn't great. Core CPI, 1.4% in 1 month. Guessing this is the national insurance increases, and yeah, year on year 3.8%. It was expected to increase from 3.4, but 3.8 is not good at all. So it bottomed, never actually got below 3%. I think it bottomed at about 3.1, 3.2%. So yeah, having a target of 2, if it never even got below 3, isn't ideal. 3.5% on headline, even with with oil price where it is. That's not great. You had some PMI numbers and things. I tend to prefer the ISM PMI numbers. Jobless numbers as well. Mixed bag, really. Continuing claims back above 1.9 million, but initial claims quite low. Does seem people are losing their jobs and not being able to get another one. You know, there's not sort of loads and loads of people losing their jobs, but the people that are sort of sticky, if you like, and they're not able to get a job. Um, and then retail sales for the UK, despite the national insurance rise, very, very strong. You know, 5% year-on-year sales. Core retail sales, 5.3%. Way, way higher than expected. So, yeah, very unusual. You'd expect sort of March to be, to be quite strong. I guess some people have been raising prices over the last month with the rise, and yeah, you've seen a tremendous rise in sales. Whether people are just buying the same stuff at the increased prices, I don't really know. But yeah, that was pretty much all of the news. Oh, and new home sales in the US. That's always a closely watched figure. That was up quite a bit, even with interest rates where they are. So yeah. And over to the portfolio. Yeah, quite a bit of change in the crypto miners. CleanSpark sort of did push above $10 and then has come right back down again. It seems to sort of take, when Bitcoin goes up, it takes, 2 steps forward, 1 step back. Sometimes sort of 1 step forward, 2 steps back, which is a little frustrating. But yeah, Equinox Gold doing pretty well. Coeur mining sort of up and down a little bit, really. Seems to sort of go up and down with stocks more than it does with gold sometimes, I think, because of their silver exposure, where Equinox is basically entirely gold. The cash here, I am sort of wondering, because it is a flexible ISA on Trading212 now, so I could potentially withdraw this cash to be used to pay off the mortgage and put it back in before April, but obviously that is a little bit risky. Ideally I would sort of not need to do that and could deploy this cash into something and just get the cash from elsewhere, but I am sort of considering that, with it being a flexible ISA. I can take it out and put it all back in again later on at no penalty, so that's good. Herein, should be noted, at 50% profit now, is pretty strong. It's doing well. Equinox Gold up to 44%. So yeah, the ISA is doing reasonably well. No change at all in the Interactive Brokers ISA, really. Pan American and KGHM sort of still bumbling along. But the option side is where the bulk of the profit has come from this week. Equinox, obviously, with that rise up to sort of 670s, doing outperforming the market and even outperforming some of the other gold stocks, has pushed it back into the green on the option side. Coeur mining touching 20,000 as well. Herein, though, is the big outperformer. This was sort of red a couple of weeks ago, just slightly went green last week, and is now 75% in the green, because they are outperforming. As I say, the only company to be reporting a proper net profit, and as Bitcoin rises, they should do well as well, and a bit of AI bump to them, I expect, as well, with CoreWeave, as I say, going up 180%. There could be sort of more optimism that someone like Herein gets a reasonably big AI deal. So that would give them a massive bump, really. Just on Bitcoin alone, I think they're worth far more than the current share price. If they were able to get a multi-billion-dollar deal with someone like CoreWeave, that would just push them through the roof. Hive has come slightly down this week. No real sort of reason as to why. They're expanding. They're doing sort of been expanding 1 exahash a week recently. So yeah, no, I think that's just market not liking them. they don't really have all that much short interest from the looks of it, because a lot of the other, it's been noted, a lot of the other miners are still heavily shorted. You get someone like CleanSpark is about 31%, 32% of shares short at the moment, and they have some convertible debt that would mean people are hedging their debt by shorting the stock, but they don't have that much. So yeah, there's potential for a little bit of a short squeeze if Bitcoin sort of goes up and some of these miners go up, because basically there isn't that much reason to be shorting CleanSpark. So yeah, I think CleanSpark could do well. Hive, are more like sort of 10% shares short. So, and they have no convertible debt at all. So there's potential for a little bit of gain with them, but it's only about 10%. Herein don't have a huge amount either. Riot do, and they've sort of not been doing particularly well. They really, really need an AI deal to be doing anything this cycle, I think, because they don't have a huge amount of exahash, and all they have is a great deal of Bitcoin on the balance sheet, which is still, reporting fake profit as far as I can see. And yeah, Himax has risen ever so slightly, but they really need another announcement with TSMC, I think, on the silicon photonics. So a lot of news required for for some of this to do well, but I'm optimistic for the next few months. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.